education in Russia. But today we are here to talk about the importance of the topic globally, and we are here to discuss how to best make sure that financial education helps with financial inclusion. We have a very distinguished panel of speakers, but before I introduce them on stage, let me please ask you to download AFI software. I hope you did it already. Please raise hands who did. Okay, very good. Because to make this session a little more interactive, we are introducing a live pool today. So we will ask some questions in the beginning of the session, and we will end up with looking at the answers that you provided on these questions, and that our esteemed guests and speakers will also talk about. So with that, let me introduce to this stage our theme setter, Mr. Deputy Governor Roll, and our panelists, Mr. Deputy Governor Dr. Siku Jabi, Mr. Deputy Governor, Ms. Deputy Governor Yanchen Tsogel, Ms. Anna Zelentsova, Minister of Finance, Russia, Moises Coelho, Banco Central do Brasil, and Armine Mkrtchan, Central Bank of Armenia. Thank you very much. Thank you very much. And I think it's turned automatically. And before giving the stage to Mr. Deputy Governor Roll, I would like to ask all the speakers. Thank you. I would like to ask all the speakers during their presentation to think about 3 points and to answer 3 questions. One is, how is financial education linked to inclusion? How do new technologies impact the quality and the quantity of financial education? And how does impact on financial education can be measured? So if all of you could think about it, and if you could address it during your presentation, it would be very good. Going back to what I said, please download the software. We have 3 questions in our poll, which is, how influential is digitalization for financial education at this moment? Can impact be measured? And what is the most important to consider when measuring financial education? Please go to the software, and while we are talking, answer those 3 questions, and we will see result in the end of the session. So without further ado, let me give the stage to Deputy Governor Roll.
All right, good afternoon, everyone, and it's my pleasure to be here. When I look at the diversity represented here today, it tells me that this issue is an important one, and one that's getting quite a bit of attention. Financial inclusion and financial literacy are twinned philosophies, and these policies have significant implications on reducing poverty and boosting shared prosperity. The lack of use of financial services, however, does not necessarily mean a lack of availability. Some people may have access. Is it on? No? Start. Oh, it's on now. Okay. It's on. Yeah. So some people may have access to financial services but choose not to use them. Others may have access but simply cannot use them because of the cost, and simply cannot use them because of regulatory issues, legal hurdles, and in some cases, cultural and market phenomena. However, quite often, what we found is that lack of knowledge of financial products and services and lack of awareness of these services usually added to the lack of availability in people's minds in terms of how and whether or not they could use these services. This is where we, as policymakers, our efforts at financial inclusion and financial literacy intertwine. So certainly in the case of the Bahamas, it is right now one of our major objectives to implement strategic goals that assist with the development of the nation's payment systems, including financial inclusion and literacy campaigns. A part of these strategic goals requires that the central bank, as a part of its strategy then, reflect a plan that introduces the bank's priorities for driving processes in the financial inclusion arena. It also supports economic, monetary, and financial stability by making savings and investment decisions more efficient for the public, enhancing the transmission of monetary policy, and facilitating the functioning of a good economy. The bank has committed to advance financial inclusion for every person living and working in the Bahamas, including those underserved groups such as the poor, the young, and people living in some of the rural family islands, and vulnerable groups such as the elderly and immigrants. So there are 5 points in the action plan. The first is facilitating new ways to deliver financial services in efficient and effective manners. The second is clarifying KYC standards to facilitate the financial services and products that are available. Essentially, this means simplifying the way the KYC process is conducted. Third, improving financial institutions' access to borrower information by introducing a credit bureau. Fourth, initiating a national campaign to increase the public's financial literacy. This is an incredibly important element for us. Fifth, other miscellaneous interventions to increase banking penetration. So when we look at moving towards a financially literate society and moving towards a more cashless society, the Bahamas finds itself in the initial stages towards increasing digital and electronic payments. Like many developing and developed nations, some of our residents still find themselves withdrawing cash from the ATMs every day simply to pay day-to-day household bills. Over the years, however, we have found a slight uptick in the use of electronic payments, primarily through credit and debit cards, as well as online banking and mobile payments. Updated technologies such as Easy Pay increase the capacity of a wide cross-section of businesses, not just the brick and mortar types, to facilitate electronic payments. However, in our case, with the decline of the availability of bank branches, particularly in some of the more rural family islands, and in those cases where there are particularly high concentration of immigrant populations, we find that these communities are in some cases completely shut off from regulated financial services. This segment of the population is forced to predominantly use cash, therefore, to conduct their activities, which exposes them to criminality and other ills that arise from amassing unbanked cash. The central bank, as a part of its strategic objective, aims to achieve a reduction in the use of cash in the economy by the year 2020. In order to do this, we believe that all residents should therefore have access to retail transactional accounts. Hence, the public would need access to affordable regulated electronic services. To accomplish this, last year in July 2017, the country passed a Payments Instruments Oversight Regulation, which is intended to introduce an economically viable environment for non-banks to also provide retail payments services. Although there are currently no electronic retail payment services available in the Bahamas, we are currently reviewing between 3 and 4 requests for licenses, and the first one should be issued in the fall of this year. With this framework now in place, to allow for licensing in this way, we will expect that non-cash payment solutions, including electronic payments instruments for bill paying, will progress quite well within the next year. In addition to this, technological innovations in this space will facilitate mobile payments, stored value payments, and other forms of e-money payments. Over the next few years, again targeting 2020, the emphasis will be placed on adequate market access to non-bank providers of payment solution services for the chain of 700 islands which make up the Bahamas. The central bank is spearheading efforts towards financial inclusion in a cashless society to reduce activity in the informal sector. It is the bank's vision to work hand in hand with the government and the private sector to achieve these goals. The central bank also recognizes that a large part of this effort has to be undertaken by the government at the local and national levels, and the government has committed to holding hands with us through this process until we are both satisfied. Undoubtedly, the private sector also has a role to play. In our case, the merchants themselves have to. It is imperative that the merchants rid themselves of this desire to accept cash only in some cases for the settlement of purchases and sales with their vendors and customers. This also means that they will have to decide, in very many cases, to no longer charge fees for credit card and debit card payments. All of this brings us to what is really critical to us, which is financial literacy. So recognizing the value of this, the central bank in April of this year launched a nationwide financial literacy campaign to promote awareness in the product spaces that would help to develop domestic financial services sector. This included educating customers on basic financial products, basic economic principles, and ways to protect themselves in non-cash environments. The literacy campaign focuses on improvements which have made the technology safer and on instructing customers on how to prevent cyber fraud. It is felt that it was important that consumers, particularly those who have been previously unbanked or underbanked, understand that going digital is safer than using cash. As mentioned briefly earlier, the central bank has also, this past summer, implemented changes to the central bank's payment regulations and guidelines. One major element here is the reduction in the awkwardness of conducting due diligence checks around customers for KYC. The new regime has not made the responsibility of the banks any less rigorous. It simply made it easier for them to implement the activity. So, ladies and gentlemen, you can understand why the experiences here and the considerations of the distinguished panel which sit here with me are of enormous interest to the Bahamas and to me personally. I hope to all of you as well. So it seems to us that as we talk about financial education and financial literacy, it all comes back to how robustly we can educate our public to make sure that they take advantage of the services and products that are available. Thank you, and enjoy the rest of the day.
Thank you, Deputy Governor Roll. I have one question to you. You mentioned several times the importance of access to regulated financial services. And the word regulated was there for a reason. We all know that now many companies from many industries outside of banking industry are entering the financial services space. So what's your take on that, and what's your position on that?
Yes, well, good catch. In fact, we have had a number of occasions in the Bahamas where there have been non-regulated, organizations that are not regulated for payment services conducting what we term to be payment services. The largest of these would have been in the gaming industry, and they're actually prohibited from conducting any sort of payment and storage value services for anything other than what is required specifically for the gaming activity. So the central bank not just has an opinion on this, there is legislation that prohibits it. And so the central bank, along with law enforcement, deals with cases like that.
Thank you very much. Let me introduce our next speaker, which is Deputy Governor Dr. Siku Jabi, to talk about a little bit about his perspective on financial education and the example of Gambia.
Thank you, moderator. It's an honor to be here to share our experiences in the case of the Gambia. Before I start, let's remind ourselves what is financial literacy or financial education as far as financial inclusion area is concerned. It's a combination of awareness, knowledge, skills, attitude, and behavior necessary to make an informed and effective financial decisions and ultimately achieve the financial well-being of the individual. According to research, there is so much focus on financial inclusion with less attention on financial literacy. And to me, I believe it's a package. You must get the access to finance, and you must also be financially literate. You have the finance, you don't know how to, your mindset is not ready how to use it. It could be another madness. It could be even a cart before the horse. So I believe it's supposed to be together. It's a package, and some even believe financial literacy must come first to build the capacity in basic financial management before access to finance. Financial inclusion, as we all know, is very important. No country can develop economically if a majority of your population is lagging behind. We have to be part of it, really. And it's not also boosting repayment. You don't educate your customers to use the money to pay back the loan, but also the loan must have impact on your business in terms of business growth, in terms of job creation, in terms of the objectives of the entrepreneur. It's so important. The importance of financial literacy cannot be overemphasized. It increases your financial awareness and improves your financial behaviors, provide customers with knowledge skills to make informed decisions, how to spend effectively and save better. It's an important life skill. It's an entire life skill. The moment you know it, it goes with you, really. It's a continuous process. Understand financial concepts and ultimately make financial decisions in the economy. You know it, you know which bank offers better interest rate, which bank offers better returns, which bank offers better products. Do they have ATM? Do they have other electronic financial products and services? You maintain your financial records. And the most important thing about it is it teaches the customer to have a difference between the business and the owner. Most of our customers do not have that. They are trapped into that. So with the financial awareness, they teach you basic about treating your business separate from yourself. That's key, you see. In the Gambia, a population of 1.8 million, we have 12 banks, 85 branches across the country, and a customer deposit of $500,000 people. ATM cards are 486,515. ATM terminals 91, point of sale 452, and from as I said, population of 1.5. In the Gambia, financial institutions, both banks and microfinance institutions, offer financial education across the board. There's a capacity building programs to help customers improve their financial management skills. They have interest in it. Many banks, each year, they organize a workshop for their customers. Some banks, before they give you a loan, they draw you to a conference room, a training room, where you can have your own knowledge about how to use the money, but the bank would also give you impact on you, their own side of it, so that you can have a collective aspect of a broad view of how you need to use the money. As I said, not only to ensure repayment, but to business to have impact on you. And ensure loans repayment, boost impact on finances, loans on business growth, build entrepreneurship capabilities to forge ahead. 7 out of 12 banks in the Gambia deploy mobile applications. As I said, mobile financial inclusion is driven by mobile device, mobile applications. It's been said here many times since we came. POS terminal, over 400 financial bureaus outlets are used for agency banking, like the case of Kenya. Many banks use these financial bureaus, over 400 of them outlets across the country. to leverage financial products. You can save, you can withdraw money from there, you can ask your financial statement, mini statement, you can apply for a loan, you can open an account, they can facilitate opening an account for you, pay bills, utility bills and all that. You can save money and withdraw money, as I said. Fund transfer, you can do all that. And do all those kind of things, really. However, I mean, as a sub-Saharan African country, there are still constraints. Technological infrastructure is still an issue across, I'm sure, not only Gambia, but many countries. This affects connectivity and sensitization must also go on. At the one part of the country, one mobile network is operating. Another part of the country, another. You see yourself going with 4 mobile phones because of those connectivity issues. However, I mean, there are still works to be done to address those kind of things. And many banks and many, they are working with telecos also to address those kind of issues, really. Also, microfinance institutions, the largest Reliance Financial Services, started working with the women program across the country. In the last 2 years, they provide 5-day pre-finance training to their clientele. 5 days before they give you money, they train you 5 days. 5 days, really. And even after that, each cycle of lending, you are given an initial, a continuous training. And this is a 5 or 7 group within a group, up to a bigger group of 50 or 70. That's the first group lending, a group member of 5. You are trained, and you are within another bigger group of 50. So there are 2 layers, and no collateral. It's a group pressure, group solidarity, a guarantee. Within 5, if one did not pay, the other 4 members will pay for you. If the group did not pay, a group member out of the 50, that means 10 groups within 50, would also guarantee you and pay your loan with the financial institution. So your next lending is not hampered. If it is 7, there's a bigger group of 70, they do that. And each time there's lending, they give you that. In 2 years, they are lending over half a billion to over 100,000 women. And this is 100% repayment. 100% repayment. At the 6, 7 cycle, 10 cycle, they become matured enough. They don't stand on their own, but they remain within the group. But their level of absorbing capacity, level of value of loan that they'll be asking may be different. Some may be asking 100,000, some 200,000, some 300,000, but it's all guaranteed within the group. Now they have their own businesses. At the beginning, with a very small amount, they work together at a common business activity. They share dividends, share profits, and all whatnot. But with time, when they become more mature, they stay within the group. But the value of loans, the repeated loan that they ask for, becomes very high, and suddenly impacts so much on their businesses. That's one of the measures we use to measure literacy that they got from the company. You see. And they build that culture of savings. Those loans are tied to your savings. The more you save, the multitude of that is given to you as loan. So it's also building that culture of savings in the customer. There are also another third group we call telcos, the telephone companies. 2 out of 4 are into this, into remittances, into bills payment, a lot of them, and they have agents all over the country. Let's say, if you include all that as part of the financial inclusion, you are saying like over 2/3 of the country is included. That's also what we call Empretech, and so is in most of our countries. This is a global model from Harvard that train young people in entrepreneurship. These are trained for 6 days and also link up to their trainers for another 6 months. The moment they graduated, they are linked to financial institutions. Well trained. They know how to make every cent of the money. Well trained to use this money, really. So these are very important, and as I say, also banks also do that. Before they give you any lending, they draw you to a training room, and also each year some banks call an SME training, where they give back to the customer, have a question and answer session, and also a presentation on SME lending and all those kind of things, really. Yeah. To summarize, to conclude, financial education is crucial in the overall financial inclusion drive. We must, as I said at the beginning, it's a package with access to finance, and it must be continued. It's a continuous process. To achieve the desired impact, financial education and access to finance must work together, as I said, to ensure not only loans repayment and inculcate habit of savings and impact on the businesses, growth, sound financial decision making, and all that. And it increases absorbs the capacity of customers and build capabilities for business sustainability. It helps better manage personal finances, savings, spending, and even investment. With that, I thank you for your attention. Thank you.
Thank you very much, Dr. Siko Jabi. You brought two very important points into our attention. Yeah. Number one is the culture of debt and the culture of savings. Yeah. How financial education and financial literacy is related to more responsible lending and to more responsible debt, and how it's important to gradually build that culture. And the second point was that financial education should be tailored to specific groups. You mentioned two examples, women and young people, that you are promoting in Gambia. Any other examples of specific group that should take our attention when we think about financial literacy? You mentioned young people, you mentioned women. Any other specific groups that you target?
Particularly women, youths, the rural community, the kind of thing. And as we know, all in access to finance, we are talking about the gender gap, the kind of thing, where women are lagging behind. And in the rural community, where most of our bank branches are not mainly present, these linkages with financial bureaus, agency banking, that kind of thing, goes to include a lot of those people on board, the kind of thing, really. And at some point, even the central bank plays a greater role. We organize trainings, we call banks, we call microfinance institutions, we call bureaus. And part of the thing, I handle financial sector stability in my country, and also a contact person for financial inclusion at the central bank. So most of the time, we encourage banks to link up with institutions that have the comparative advantage to reach out at that end, so that their financial products could be leveraged at the remotest part of the country with mobile technology, with some. Now we have big subs at the village that can link up the financial institutions. We have filling stations that can link up the financial institutions. We have financial bureaus. One financial bureau can have more than 40 outlets, let's say, across the country. If that head office is linked to financial institution to leverage financial products, all the 40 branches are immediately, automatically linked, really.
Thank you very much.
These are all ways to reach out. And it's important that women and youths that are very active part of our population are included, not excluded, if we are to forge ahead. Thank you.
Thank you very much, Dr. Sikachabi. Thank you. I would like, before moving to the next speaker, I would like to remind you that we have 3 questions in a live poll. Please download the software if you haven't done so already. Go to the questions of this session, and in the end of the session, we will make a conclusion how we think about the importance of new technology for financial literacy, the impact, can it be measured or not, and what are the most important means of measuring the impact of financial education. Please don't forget to answer the questions. And with that, let me turn over to Deputy Governor Yanchin Sogel. Yes. And please talk about your experience in financial education.
Good afternoon. First, thank you, AFI, for the opportunity to share my country's experience, and thank you also to our host, the Bank of Russia, for your warm hospitality. I will be focusing on the inclusion aspect of financial education for youth in the context of 2 initiatives that we have recently undertaken back home. Being Bhutan. We're in the Himalayas. We are roughly the size of Switzerland, and we are sandwiched between India and China. Apart from many things, Bhutan has been blessed, I would say, with a leadership that has placed social inclusion on the forefront of our development agenda. We are driven by this development philosophy called gross national happiness, which emphasizes inclusive and sustainable development in order to achieve this vision for a just, equal, and harmonious society. Now, from a financial inclusion lens, this vision of a just, equal, and harmonious society we translate it as an environment where citizens who are willing to engage themselves productively actually have the means to do so. Citizens are actually empowered to do so. And this really is where financial education has a very important role to play. We are at a very critical demographic juncture in Bhutan. We are a very young population. Our population is concentrated in the 20 to 29 age group. Public sector employment is still the preferred choice for our youth, but this employment is limited. So this sense of urgency of promoting self-employment and entrepreneurship, and of promoting a culture of innovation and creativity among our youths was behind one of our recent initiatives called the Student Business Seedling Project, the SBS project, which we implemented in a local high school. The project itself, through the project, the students were involved in a 4-month-long program where they were immersed in a design thinking workshop. They were taken on field visits to local entrepreneurs. They also engaged with mentors, and then we had a boot camp as well for the students to help them develop their business proposals. And finally, we gave them a pitching session, and the top 5 were given scholarships to continue their high school. The students, it was an amazing experience for ourselves as well. The students were enthusiastic, and then I think they acknowledged and they saw the SPS platform as giving them an opportunity that widened, I think, their approach into business, into ideas, into possibilities for employment. A lot of them were facing realities where they would not be able to continue their education after maybe the 10th or even the 12th standard, actually. We are now structuring the SBS project to be replicated in other schools. We are developing very detailed trainer of TOT materials, guides, manuals. My team, in fact, is meeting with our counterparts to streamline financial literacy in general and this SBS project into the school curriculum. This, I think, will take some time, but in the meantime, we will continue to identify pilot schools and to keep testing out this SPS project. Another project that we have, I would say, successfully implemented is called the Youth Ethics Banking. The Youth Ethics Banking. This was actually an idea that was proposed by a student in the 6th grade during the Global Money Week celebrations last year. So what happens in schools in Bhutan is that for academic excellence, for extracurricular participation, and for general good behavior, the teachers give you stars. So the proposal from the student was that instead of stars, they should be given dummy notes that they would continue to accumulate at the end of through the year, and at the end of the year, the student who had the highest number of dummy notes could be given prizes. We have taken her idea and we have developed it, and we are implementing it. And in fact, these dummy notes, we are giving it value, so that at the end of the academic year, the dummy notes are actually converted into real currency and deposited into the students' saving accounts. But the underlying idea behind this youth ethics banking is really to teach our students to learn to earn and to value that earning. So again, this youth ethics banking is something that we are also going to be trying it out in several other schools as well. My dear audience, financial education is very much about teaching how to fish rather than providing the fish, and it is about much, much more. It is about equipping our youths with the knowledge of where to fish. It is about providing them with a moral grounding of fishing responsibly. And it is also about giving the resilience and creativity to look for value and opportunities if there are already too many fishermen or women, I suppose. So let me conclude here with 2 insights from our experience. One is, the first insight is that the importance, and indeed I would say the moral argument for promoting financial education for our youth is very well accepted. But I would stress here that this moral argument must be framed and driven by a leadership that is able to articulate a very clear vision, and by a leadership that inspires collective action. because this agenda is multi-sector. You need the buy-ins of a lot of agencies, and for sustainability, this collective action, collective ownership is very important and key to driving this sustainable in a sustainable way. Is, I think, boils down to leadership. And the second insight is that the financial education itself must be based on a strong moral foundation. And here again, I'm referring to integrating very basic human values. I think the Deputy Governor from Gambia already talked about this culture, instilling this culture of responsible borrowing, and this is also what it is that we are doing as well. In our context, it is also about instilling values for dignity of labor. So we have this perpetual debate and preference for blue versus white-collar jobs. So our two key takeaways is that leadership is important, and the second one is that there must be a moral grounding for the financial education. Thank you very much.
Thank you very much, Yanchin. One question. It's actually shocking that the largest group is 20 to 29. This is indeed very young population. One of the questions that we wanted to talk today about is the impact of new technologies. So you must be leveraging also a lot of the new technologies to be able to work with this particular segment of the population. Could you a little bit talk on that?
Yes. Actually, we are a very largely agrarian-based society, and our experience with the Student Business Seedling Project was that students are still thinking along agrarian lines. So a lot of the projects that they were initiating were related to agriculture, related to value chain in the agriculture. But even here, I think there is space to leverage on fintech. So this is something that, I mean, we're a small country, I think, and then if you look at our geography, we're in the Himalayas, very widely dispersed. So whether it's in terms of even financial inclusion, delivering services, or even in terms of logistics, anything fintech, of course, we must leverage on fintech. So this is definitely very important.
Thank you very much. Let me pass the stage now to Ms. Anna Zelentsova from the Ministry of Finance, Russia, to talk a little bit about our country's experience in developing financial education. Anna, if I could ask you to focus a little bit on measuring the impact, it would be great.
Thank you very much, Ekaterina, and I'm very glad to participate at this event, and also very glad that it happens in my country. So welcome to everyone to this nice place, and I'm also very glad that it's in Sochi, because Sochi is part of Krasnodar region, and Krasnodar region is one of our pilot regions in financial literacy, quite advanced already. I just recently came back from one of two biggest summer camps in Russia, which is just nearby, and I want to start from saying that we worked with teachers there, but we also worked and communicated with kids. What was important and what was good to hear from kids, that after we had different kind of games, modeling adult life and financial aspects of life, they told us, we understand now our parents better. Because before, when I asked my parents about new phone or something else, and they said no, I thought they just don't love me. They don't want to buy it to me. But now I understand how it's difficult to balance all needs and priorities in family. So it was really good example how this practical learning by doing, modeling adult life help kids to understand and be engaged better in family budgeting. But we in Russia have big national project on financial literacy run by Ministry of Finance, but also now from last year, together with Central Bank, Ministry of Education and other agencies, we started national strategy. That's why it's very difficult to, in 5 minutes, to say about whole our huge program. I would like to focus only on youth. As already was mentioned, that youth is very important. We consider youth as, future of our country, and it's one of our key target audience. So I would like to say that when we started our work in 2011, we started from developing financial capabilities framework. We in Russian Ministry of Finance strongly believe in three things. First, in sustainable systematic approach. Second, we believe in education and edutainment and new technologies. And third, we believe in measurement and evaluation, in evidence-based approach. So we started from developing financial capabilities framework, and then all our educational programs, all our textbooks, educational materials based on this framework. So they all focus on competences in sustainable way, from preschool till third age. But again, now I will speak more about young people. And we developed the educational courses, first elective courses and extracurricular activities from preschool to high school, and then courses for colleges and universities. When I say courses for colleges and universities, for example, I mean that it's not professional course. We don't teach them as workers of banks, but I mean that it's part of a general education at elementary school, middle, high, and university. And then we piloted, tested all these educational programs in 5 regions. We corrected a lot. We had big debates, but now it finished. And this year we sent to our regions 8 million textbooks. When I say 8 million textbooks, I mean that we have one textbook for kid.
What was the population of Bhutan?
We can, yeah, but first, sometimes people ask me a question, do you have it in English? I say, no, first we need to work on Russian population in Russian, then we can give it
first
to others.
We should launch a project on English language literacy and then move to English.
Yes. So we have all materials for schools, we have textbooks and materials for kids, then for teachers. And third very important component for parents. We also have special materials, educational materials for parents. So we try to engage them in financial education process. And you know how it works? It works that kids are better in financial literacy when they discuss it with parents at home. But also parents who, we all grew up in Soviet Union. We got used that government should be responsible for our financial decision. And now it's market economy. So we didn't have this experience ourselves. So sometimes now parents learn from kids, and they also learn for sure on digital literacy, digital financial literacy from kids. Kids are more advanced in many cases than our adult population. So we did that. And then we thought, okay, there are a few ways how to do it in sustainable way for young people. First, yes, these selective courses, but not every school can select it. So we need to go to national curricula. We need to put it in this obligatory part. But curricula is overcrowded as everywhere. So we don't want, at least at the moment, we are not able to implement or to make one specific subject. So we included and integrated it into math, into Russian language, English language, and other subjects, and prepared additions to the textbooks. Then, of course, mobile apps, cartoons, games, we do everything. But what is important? Important that teacher can be able to teach them. So we started at national scale, we started trainers program for teachers. And we already trained about 20,000 teachers, and then colleges, professors. And final, about measurement. Of course, we are still on the not very advanced stage, especially about adult financial literacy, but on young people, we have very good progress. We participate in PISA, OECD PISA test. It's test for 15 years old students on financial literacy. And first time we participated, we were below average OECD countries, and we were on this 10th place. And now we're on 4th place, and we are up higher than average of the OECD countries, so we made the biggest jump, let's say, for 3 years. And when we checked which schools have the best results, those schools which introduce financial literacy within our project for these 3 years. So we believe that it shows that our approach is effective. But I need to stop now and will be glad to answer questions. Thank you.
Thank you very much, Anna. I think it was already mentioned here that financial literacy and financial education is not solely responsibility of the government. I think you mentioned that it involves a lot of the parties to make it effective. What is your experience in Russia? How does the government, you mentioned government and central bank, how do you engage business or any other parties to participate in this?
No, I absolutely agree. Even we have good resources, we have capacity, but it's still not enough. It's even not the question of money, for example, in our case, but it's also a question of competences. Financial organizations, financial institutions, they are more advanced, like modern technologies. So we are governments often behind. So of course we want kids and adults learn from these experts. That's why we strongly believe in cross-sector cooperation, and we already have good experience in that. Every year we organize this Global Money Week in Russia, but also Savings Week in October. This year we also will have it. And we have partners, financial organizations, from biggest banks to payment systems. Actually, you also participate in that, and other organizations. But we think it's important to avoid conflict of interest. That's why we sign agreements with financial institutions that they would not sell their products. We educate them about that. We educate their tutors. Yes, they are professionals in finance, but still they don't know how to communicate with young children, for example. So we give them a special course on that. And then we invite them to participate. This year they conducted already more than 5,000 classes, only for 1 week in spring. But of course, we need to do it in more sustainable way. So we signed agreements with key banks about strategic partnership within national strategy. And we try to organize now some kind of coordination committee with business to work together. We strongly believe that we need to do it, and especially in the areas where we have less capacity. But also they often ask us to help. For example, just in 2 weeks, our stock exchange will conduct big fair, financial fair for adult population. About 30,000 people are going to participate there, and we will provide classes and consultation in consumer protection, in financial literacy, in responsible debt, responsible lending. So we cooperate a lot.
Thank you very much. I think it's quite similar to what Deputy Governor Roll was talking about, right? Engage in financial institutions who have far greater reach. Thank you very much, Anna. I remind you once again about the live poll going on. Don't forget to give your answers to the questions. And I'm happy to introduce Mr. Moises Coelho from Banco Central do Brasil.
Oh, hello, good afternoon to everybody, and thank you, AFI, thank you, Bank of Russia. And when we think about innovation, we usually think about technological innovation, about digitization specifically. But the project that I want to present to you now is we believe it's very innovative, but more in terms of approach, more in terms of delivery method. It's called the É da Sua Conta project. It roughly translates to It's of Your Business project, and it's basically the provision of financial education through consumer protection bureaus. And I think it's interesting to bring this project here because it's a good example of how we in the central bank, we prefer to integrate the 3 pillars of what we call the financial citizenship, inclusion, education, and consumer protection. So, for us in Brazil, our main problem for we can say that our main problem for financial inclusion, it's not access itself, but it's more usage and quality. We have very good access numbers. Around 87% of adult population is banked, and we have a part of the banking network in all of our municipalities. But as we have this problem of usage and quality, and since we want to improve that, we obviously need financial education, because we need the population to understand that they need what they can do, how they can use different, more complex financial services. And also, if you have a lot of the population that is banked, but the banking services the quality isn't where we want it to be, probably going to need a lot of recourse mechanisms, and this is true. We have around 900 consumer bureaus spread by the country, and those bureaus, along with the central bank, we received more than 1.1 million complaints last year. And if you just consider the banking system complaints that the National Consumer Protection Information System received, the banking system is in second place in the complaints ranking. It's only behind the telecommunications sector. So this partnership with the consumer bureaus is very important for us, because it solves one of our main problems when we're thinking about financial education, which is the sheer size of the country, or more related to the problem of Russia than the situation of Bhutan. We have continental dimensions. We have 200 million people in the country, and it's a very diverse population. So whenever we can find partnerships that can reach more people in the central bank, we are only in 10 cities. So if we can get away to be in 900 cities, it's perfect for us. But in this strategy, we have a new problem, because all those consumer bureaus, they are very heterogeneous. Some of them are very well structured, they have very well trained people, and some of them do not. The attendants are not as well trained as we would like them to be. So what we thought in the central bank that we could do was to help the consumer bureaus to train those attendants, so that when they are registering those complaints, they can provide the population with financial education that's created by us, that's from our program. And it's interesting also to note that you can actually file those complaints online, by online resources, but the people that go to the bureaus, that physically go to those bureaus, generally are the more underserved population. They are the poorer people, they are the retirees. So these are particularly important groups for us to reach, because those are the ones that usually lack financial education the most. So when we were thinking about how to create this training system for those consumer bureau attendants, we use a lot of human-centered design. We're using a lot of tools in that sense. In the central bank right now, for considering solutions, instead of just thinking about the problem and then going what we're going to do. We start thinking about the person and how to develop this, and then so we created this online course that's available on our website. It's 8 hours long. We have 12 modules. We have the case database that I think it's a very interesting initiative that we had. We got the ranking of those 1.1 million complaints that we got from the central bank and the National Consumer Protection Information System, and we ranked them and saw which were the subjects that people were complaining the most about, and then we created some cases that the consumer bureau attendants can search for, and they can read the cases and they can create the answers based on what we wrote for them. So they're going to solve the person's problem, but at the same time they're going to leave the bureau with some with some financial education, some punctual financial education that came from us, came from the central bank, came from our principles, came from what we want the population to have. And on the impact assessment part of the project, it's important to mention that we made the impact assessment only for the attendants, to see if their confidence in attending people, if they believe that they are doing a better job, is there after they take the course. And this was statistically, the improvement was statistically significant for all the modules. They feel that they are doing a better job, and we know that we must improve the impact assessment for the population, how they are going to behave in the future after they leave this project. So this is something that we still have to implement in the future. So this is the project that I want to present to you. I think it encompasses well the themes of the breakout sessions. Thank you.
Indeed so. Thank you very much, Moses. And I'm happy to introduce our next speaker. I didn't ask you a question, right? You're looking like, where is my question?
If you don't have a question.
I'll ask the audience a question for Moses on the example he shared on Brazil. No?
No need for questions.
Okay, thank you. I'm happy to introduce Armina Mrkchan, Central Bank of Armenia.
Thank you, Katerina, and I will change your focus a little bit from one angle to another angle of the room and bring you a new angle on also how to make a pizza that fits all. So my team calls this like this, pizza that fits all. A bit of history. We started in Armenia financial education since 2008. It was learning and testing and learning period, not much standards and experience yet, so not much we can take from others. And until 2012, we had 5 big headaches. And the first headache, we call it needs, to understand the needs. And it's not about only needs of consumers, so what they need to learn, it's about needs of our stakeholders. Well, it's a red line key message going through all this panel, and you may know in your countries as well. They are two multi-layer. They are differently looking on the same fish in the bowl, and they have different appetites, and we are talking about different things. So we need to understand their needs as well regarding financial education and needs of consumers, of course, what they need to be learned. The second headache is about baseline. You know, you are in a dark room and you don't have any reference points. So you can move basically wherever you want, but you don't know where to move. So we need a reference point to compare us over time and then understand where we are moving, and then to look back and say how far we moved from. The third headache was called priorities. So basically, I envy sometimes Russia when they say we don't have finance problem, but we have finance funding problem, so our resources are not that much. So we need to be more optimal in using those, and then prioritize what is coming first, what coming second, for what is the next. And that priorities should be in line with our stakeholders' priorities, which is more complicated stuff. Then effectiveness is, if you have resource issue, then you should come up with effectiveness, because people will ask, well, why you spend so much money? Where are our financially educated people at the end of the year, or 10 year, or 20 year? How long is your strategy? Depends on your country. And then accountability. Of course, if you are doing this, then you need to be accountable and saying that, okay, my progress is by 5 percentage points, or 10%, or I reached my target, it's like 100%. So these 5 headaches, it's not invented, but repackaged what we have in the international fora and make a new tool, which is called Financial Capability Barometer, together with AFI, that help us to tackle all these 5 headaches. So it's not one solution for all your diseases and problems or issues, but it helps really, really a lot. So financial capability barometer is a methodology that very simple, easy way to measure the capabilities, that is knowledge, skills, attitude, and behavior in the country, and bring in to stakeholders, bringing something like this at the end of the day. For example, like economic impact, budget, savings and planning, debt management, shopping around, right protection, safety. These can be topic of your curriculum as well. And there are capability components, knowledge, skill, attitude, behavior. So we need to have one single number, which is not ideal number. Everybody understands statistics and their problems, but something that all stakeholders, with these multi-layer stakeholders, they all will perceive it as one number. And the financial capability index, like 44% for Armenia, we measured it in 2014. So later, we more doing tailoring, prioritizing, and just one example. So for example, we found, and when you do this survey and find and build this matrix for competencies in your country, you will be amazed how results can not fit your expectations, and then you will see, no way, this cannot be, something wrong out there in the survey. Well, our statisticians and researchers, they come back to us and say, the problem is in your mind, not in your survey, so change your perspective. So what we found, for example, is the safety. Safety is about how to be safe on financial services area, including digital, so avoiding fraud and etc., all that stuff. So we found that in Armenia, Armenians are really, really good at safety protection. So behavior is 67%. Attitude is even higher, 74%. So how can a person, the question comes, how a person can be behaving so correctly, but knowledge is only 10%. Then when dig a little bit deep, understand that they really care about their safety and they do their best efforts to protect themselves. It's just a matter of knowledge that they don't know what precisely to do. So for example, for this theme, we know that attitude and behavior, the most complicated, most tough component of financial capability, we don't need to put more efforts on this and resources on this. We just need to provide people with some knowledge on how to protect their rights, how to be more safe in the area. That will be enough for them to behave the way we want. But now look at the saving and planning. It's the lowest. And low in knowledge, low in behavior, low in attitude. And we are in a trouble here, which means we need first to build attitude for savings and long-term planning. Then after that, to give them knowledge, and then really pass a long way to bring this 34% a bit higher. So these metrics give this tailoring and prioritizing possibility for us, and not only for us, so all our stakeholders, but whatever is their mandate for financial education, they can look at it and see what are the gaps where they can focus and where they need to pass over. And these metrics can be done by different dimensions. Women, female versus male, like gender dimension. Can be rural versus urban. So you have like financial capability index for rural and for urban areas. What is the difference? Do you need to differentiate it or not? It can be for all the generation or young people or somewhere in between, or can be for higher education or for people with no high education. So different dimensions can be elaborated, measured, and then policies, the financial education programs can be tailored also for different dimensions. And this tool called Financial Capability Barometer, which is on site of the AFI, the paper, and basically it's a tool that can help you to deal with 5 headaches, which are really tough headaches sometimes. Thank you.
Thank you very much, Ermina, for emphasizing once again two things, right? One is that the educational programs, financial education programs, works best when they are tailored. And second one, very clear methodology of tracking results and measuring them. Because like you cannot navigate something or improve something that you do not measure. Thank you very much. Let's now see what we have, what answers we have to our poll questions, and how different they are to what we discussed. Okay. In your opinion, how influential is digitalization for financial education at this moment? In the majority, 50% is very influential, with totally influential being 16%. So 66%. Oops. It's increasing as we speak, I think. So only 6% of people that are saying that digitalization is not important. And the rest 94 believe it's influential. The degree is different, but over 67% trust that it's very influential. And as we discussed, and I think Moses gave a good example of online programs delivered on the spot, that digitalization allows us for better reach, but that's just one thing. Another thing is better quality through tailoring, gamification, personalization, and other aspects of the education. Second question, can impact be measured, yes or no? Okay, after the example of Armenia, I think we are all convinced it not only can be measured, but it can be measured by multiple dimensions and multiple parameters. Okay, I'm glad that the audience agrees with us. And the last question that we have, what are the most important components to consider when measuring financial education? And here we have possibility to define financial education needs for population at 36%. Oops, I wanted to say equally important, but I see now, but even more important is how easy it is to monitor the effectiveness. No, they keep changing places. But let's define that these are the 2 most important ones. Number 2 is simple to communicate with stakeholders, how simple it is to communicate with stakeholders. Okay, they're equal again, see? And priority topics for financial education agreed with stakeholders. Okay, so we have 2 most important ones and 2 second, I would say, roughly. It's important to be able to define needs for population, easy to monitor system, and priorities shared and communicated. That's how I would summarize it. And now we have
Ekaterina, it's live showing how our audience thinking right now, you know.
And since we started a bit later, I think we still have time for a couple of questions from the audience. Please, and when you ask your question, please introduce yourself and please say who this question direct to, who you would like to direct this question to. Thank you. I know that we have 2 minutes, so 2 questions. Okay, please go ahead.
Can you hear me?
We don't have a handover mic. Mic is coming. It's coming your way. No, you need to speak to the mic because of the translation.
Maybe you just use
You just jump over here.
Thank you very much. This is Masihullah Farah from Central Bank of Afghanistan. Well, all these presentations were very nice and fruitful. As we have seen, the impact evaluation that have completed and done by the Armenia. My question is from all the participants who love to answer it. Okay, that do they do the same analysis for the impact evaluation, or they have another approach for the impact evaluation in order to see how it's effective, how their financial literacy policy effective for the society? Thank you.
Thank you. Any volunteers from the panelists? Okay, Anna.
Yes, thank you. As I said, we also pay a lot of attention to evaluation. And by the way, Armini, you said you envy we have budget, but you know we need to every year to give back to our government report what's changed. And actually, such impact evaluation is very helpful because we spend budget money, so it's important to show what is the progress. And you know, they don't want our story that it will be in 20 years. They want to see it right now. So we do nationwide sociological survey. We also have our KPIs, quite similar what Armini said. What is changed in knowledge and in attitudes, and what is also important, in behavior of Russian population. We had big debate what to choose at these KPIs, because you know in some situations economic situation is worsening, so people save less. So it's not because they are less financial literate, they just don't have enough money. So you need to choose such KPIs which are not so volatile, so that you can use them to measure really financial literacy program. So we do this national survey, and then we do survey of our pilot regions, and then we do survey also measurement, testing, tailored particular educational programs. So all three levels. And what we see, even at the national level, we have some growth, like we had here now, then some, you know, falling down, depending on economic situation, depending on season even, you know, summer and winter can be different. But our pilot regions, where we have comprehensive programs, including information campaign, including education in all schools, including consumer protection, consultations, they all grow. So this is very important results. We still don't have, you know, programs in all Russian regions. It's the task of national strategy. But we see that in 9 pilot regions, it's huge. You know, it's almost 1/4 of or 1/5 of Russian population. We have good results. So we measure it every year. And we also look what are gaps, the same as Armini said. And for example, we know that for kids, for young people, still a gap in digital literacy, because they don't understand that they don't need to put your personal information in social networks, for example. So we add, next studying year, we add these components to the financial education. But of course, we look at this as holistic. You know, when we started strategy, some my colleagues from advanced financial literacy programs like Australia and others they say don't put figures, don't put figures, don't put these KPIs. You know, you will not able then to report, but we did it. So,
thank you very much. And there, okay, the lady in the blue dress was first. So if. And we will need to conclude blue. Blue with no print. Third row. And there, unfortunately, I have a message that we need to conclude this session. So, and there, please grab coffee while you go into the next session, and use the opportunity to catch our esteemed speakers during the breaks. And you can continue the conversation in a more intimate and private setting. Okay, the last question of the session, please.
Thank you, La. Thank you for the biased opportunity. My name is Nangse, and I'm from Bhutan. I work for Royal Monetary Authority. My respect and my question goes to the first Deputy Governor, Dr. Sekou Jabi Nangadev. So this is what I learned from my lady who's sitting next to me. She's from Gambia too, so it's like saying hello, I think, in Gambian. So Nangadev once again, Dr. Jabi. I really liked your perspective of saying, explaining financial literacy and being it, like it's like a package. You're looking it into a more of holistic way. So, which I too follow your perspective, I must say, especially for small states and especially for developing economies like us. So, with regard to that. I was also wondering, as of now, had a lot of questions in my mind until now. Before providing access to finance, do we start financial literacy from that stage, or do we start from teaching our consumers, in simple words, how to earn? So, in other words, I'm talking about entrepreneurship again. So my deputy governor also gave a very good example of fishing. So do we just equip the fishermen with fishing rods, or do we give them money, or do we also teach them how to fish or how to even catch fishes, even among the competitors? So for my first question is regarding entrepreneurship. How in-depth Central Bank of the Gambian's efforts are towards enhancing entrepreneurship in your area? My second question...
No second questions, I'm sorry. and actually, you took the 2 minutes allowed for answering the question to ask the question, so one question is enough.
Is it
I took the liberty of being the moderator of the session, so sorry.
Yes, thank you. Financial literacy is all about empowering. Is he listening? Yeah, financial literacy is all about empowering the customer, the kind of thing, really. And I can tell you a story about, I'm one of our AFI members, in a country where people borrow irresponsibly. If it comes to repayment, it's a problem. They eat less, they sleep less, some even commit suicide because of the irresponsible lending. But if you get the mindset right, you train the person like Empretech. You train the person how you manage money, how to use money. Let's say, if that person has access to that finance, and so it's going to be used in the best possible way. The person is going to be able to manage it well, will be able to save better, will be able to spend responsibly, and even balance to invest it. So it becomes, you sort of mold the person. But if you have the finance, the training is not there how to use that finance. The money is fungible. You can divert the use of the fund to a very unproductive use. At the end of the day, come repayment time, you don't have any other income to pay for it. You become so indebted, at the end of the day, it goes back to affect financial inclusion. Because the moment most of that clientele did not pay, it goes to affect the portfolio of the financial institution. At the end of the day, the profitability, the capital, and whatever is all affected. So it's important that it's a package, and many believe financial literacy must come before access to finance to get the mindset ready. Thank you.
Thank you very much. I would like to ask Mr. Deputy Governor Derek Kroll if he has something in conclusion after setting the themes for today's and setting the year angles. Are you satisfied with the discussion? Anything important that we missed from your perspective? And that will be the conclusion of the session.
Thank you. Yes, it was quite an interesting afternoon. It was the Armenian perspective on measuring the effect of education is really interesting. The Bahamas is relatively new to the financial inclusion education aspect of its operation. Like I indicated earlier, we just actually launched this year our campaign around education and financial literacy. So it was interesting to see the perspective from Armenia. I'm sure that will add some value to our perspective going forward, and I appreciate that.
Okay, thank you very much. I think actually each speaker added an important angle to the question of financial literacy and inclusion, and we all hopefully learned something today. Thank you very much for participating in the session. Sorry for those who didn't get a chance to ask questions. Please use the opportunity to do it in an informal setting. Thank you very much. Bye.